What's up, yo? Can't really even see myself with all this glare I got going on. It's whatever. It's all good. Today I want to talk about the differences and similarities between Bitcoin and Dogecoin. Now I know a lot of people are like, dude, like, what do you even? How could you even try to compare those? There's a lot of similarities between specifically how they're trading right now. Um, I just listened to this discussion last night. It was on Twitter. Like Mark Cuban was arguing with somebody like through some tweets, and he's like, "Well, why don't we do an interview or something?" Blah blah. So I don't know. Somebody did a space, and Mark Cuban jumped on. And they're going back and forth about stuff, and I'm like, "Damn!" Like I'm trying to I'm listening to everything they're saying, but I'm like, dude, like there's certain points like I wish I could have got on. Like really, I clicked to get on, and then I even like tweeted to the dude who was running the space. I was like, bro, let me on. I got points that can like clarify a lot of stuff that y'all are kind of going back and forth about. But and so that's why I decided today I'm gonna make a whole video kind of going over some of those points. I really, to be honest, there's like so much stuff they're talking about. Like I don't like remember every point that I was like thinking about at the time. That's why it would just be cool if I was in a space like with the discussion, like people saying this and then, and I'm like, I can see where relevant points would fit. But instead, I'm doing a video, so hopefully I cover most of what I wanted to. Anyway, so the thing about Bitcoin, obviously, is like I love Bitcoin. I knew about Bitcoin like way back, like when it first came out. I understood its original intent, to create a relatively stable type of money with a finite supply, that would, not be subjected to inflation, and changing interest rates, which affect the supply of money. Yeah, it was like basically a new monetary product, to compete with fiat currencies around the world. And I thought it was great. I downloaded a Bitcoin client on my computer. Yeah, it's still on there. The computer, I busted the screen, but I still have the laptop. This was way back. I think this was maybe like 2011 that I downloaded the Bitcoin client to like do the mining on my computer. And but I came to understand pretty quickly that my computer was not fast enough to do much, but I tried it anyway. It's on there. I don't think I uh, ended up mining anything. I don't think there's anything on that account as far as I know. Haven't checked it really, but I know I didn't run it very long. Anyway, so it's a network. It's blockchain, obviously. That was the invention of blockchain. I don't know all the technical terms. And really, I was listening beyond that Mark Cuban kind of debate that was going on to another space that some of the people from that started after, and they were talking about the differences between Ethereum and Bitcoin, and how I don't really even know the differences between proof of work versus proof of stake. I don't know what proof of stake is. I understood what proof of work was. It's like, to mine the I don't know, I have a general understanding. That's not the points I want to talk about. I know some people are gonna listen to this and be like, dude, like, this dude has no idea. Like those Bitcoin people last night, they were like, so like there was this one dude who got on and he started talking about Ethereum. He's like, what about Web 3.0 and blah blah blah, and they're like, oh my god, you're such an idiot, bro. Like it doesn't like it's like, bro, like anyway, yeah, I'm not like I don't not gonna lie, I haven't really dug into the differences between all the technicalities of all these different cryptocurrencies. Um, I understand that Dogecoin was made as a joke. on the Ethereum network it's a token, right? On the Ethereum network, it's called ERC20 or something like that type token. If I'm not mistaken. I don't know all the technical stuff with all this stuff. Like, I'm not that deep into it. What I do understand is the economics of it. That's really what I'm trying to get to. So it doesn't have a finite supply. It was made as a joke. The thing about those, the thing that really caught it on and really caused like a major spike in its price is Elon Musk. It was, and I remember this. I was there, and I thought it was hilarious because it made a joke of our entire money system and money itself. But it was basically a meme that had a dust storm coming over a city and had like a Doge face, like, on the dust storm, and it said, Doge, taking over the entire uh, world financial system or something like that. And I was like, it's pretty funny because Doge was made as a joke, but honestly, it could function as money, and it kind of does, and that's what Mark Cuban was saying. Mark Cuban was saying that it can function as money. He's accepting it for payment for Mavericks tickets to basketball games, and other people are doing it too. And the reason, he said the reason he got into it, and the reason a lot of people are getting into it, is because it's fun, and it is fun. It was made as a joke, but the thing is, I think it's a good joke. It's like it's poking fun at how it's basically poking fun at the already existing financial system. The thing is with fiat, I guess we could throw fiat as like a third wheel here. It doesn't have a finite supply for sure. It's constantly printed and created on computers. There's fractional reserve banking, which gives pretty much every single bank in existence the ability to create money on the spot and hand it out to people as credit loans. And the money supply has just been growing, ever since really, like, with this current. I'm not like 100% on all of the monetary history. Like, let's say in the United States, I remember, I think during the Civil War they had greenbacks, which were just literally printed by the government, like paper greenback notes printed by the government that I think Abraham Lincoln was using to pay the Union soldiers during the Civil War. And then at some point, 1913, Federal Reserve Act was signed, and the United States started borrowing money from a bank that they gave permission to print money. They gave the Federal Reserve, which is made up of member commercial banks, the legal right to print money, and then they're basically borrowing money from them. The government, from what I understand, actually issues bonds, which they'll have to pay the maturity on, like either 5, 10, whatever, however many years the bond is issued for, down the line. And I think the Federal Reserve buys a lot of those. And I think, if I'm not mistaken, they might just straight up print money to buy those. And they have a ledger, like or whatever you want to call it. I guess it's called a ledger. But like, they have, like, Federal Reserve, from what I understand, like, owns a lot of assets. And they're given the legal right to literally print money. It's a bank made out of commercial banks that literally has the legal right to print money. To me, that's just like, that was actually one of the first things that kind of shocked me, as far as the functionality of our world. And this was like kind of right before I learned about Bitcoin. That I learned about that. I remember it was it's actually on an Alex Jones documentary called The Obama Deception. Like, right after Obama became president, I was just like skimming through the internet and came across that. And Alex Jones talking his like spooky dark voice, like, ooh, and I'm like, man, like, I wasn't even, I didn't even know what I was watching really. And but at some point in the documentary, he's like in front of a Federal Reserve building with like a megaphone. He's like, "We know you're a privately owned bank. We know you're not part of the government." I'm like this dude really saying that the Federal Reserve is not part of the government? So I looked that up, and sure enough, they call it a quasi-public, quasi-private organization, and basically it's made up of member banks, commercial member banks, and supposedly the government appoints a chairman to the Federal Reserve, but still they operate independently from the government, and they say, oh, that's necessary so that government doesn't influence their monetary policy. It's like, so we're just letting some independent organization govern monetary policy that affects like everybody who uses the dollar. You know what I mean? It's like, that's bizarre to me. But anyway, that blew my mind. I was just like mind blown by that, and the implications right there were crazy, because I'm like, these people are printing money, bro. Like, these people if you can print money, you can like buy anything. You have like all the power in the world almost, like, I mean, not literally, but it was just shocking. I was just like, what? Like, are you kidding me? These people are printing money and it's not even part of the government. Like, how is that legal? And there's a history of that. There's a Woodrow Wilson, and then there was a kind of I think it was a special session of Congress that was held, like, I think like most of the members of Congress were like going off on like Christmas holiday break, vacation, whatever, and they held like a special session and passed the Federal Reserve Act. If I'm not mistaken, it was the winter of 1913. And yeah, that kind of just gave the Federal Reserve control over the entire monetary system in the United States. But the thing about that is, and I'm not trying to get too far off subject, I still want to get back to Bitcoin and Dogecoin, is that that kind of what has existed for a long time in most countries are money monopolies, where there's one type of money that basically an entire geographical region uses, and if there are, if any single organization controls the supply of that, they can control the value of it. You know what I mean? And they control the supply through changing interest rates, because pretty much the entire money supply of US dollars is borrowed. It is at this point, and interest is charged on top of that. So because it's borrowed, a lot of money goes in, and then to pay interest, more money has to be borrowed. And so it's like a revolving door. There's constantly like all the money that's currently in circulation of that type of money is borrowed. It's debt-based money, and the only reason it's still out is because it hasn't been paid back yet. And some of it goes in, gets paid back, but then new money comes in to keep a circulating money supply. And on top of that is the interest charge. So it's perpetual debt, because there will never be enough money to pay that interest on top of the money that's already borrowed and circulating. So every dollar that has been borrowed and is circulating has debt attached to the top of it that can never be paid back, because you have to borrow more money with debt attached on top of it to pay that interest. And so it's perpetual debt, and that's what it is. It's a big scheme, and it's stupid. And the government could do like they did during Civil War and print money, greenbacks. And some people say, oh, well, you can't let the government print money. That would be, they would just print it to oblivion. It's like, that's exactly what the Federal Reserve, who is an independent organization, is doing with the Federal Reserve note. You know what I'm saying? It's the exact same thing. And I've explained this before. Like, they're basically, as they're printing money, they go to the market and buy real wealth, like real goods and services, capital, resource. And they're trading this paper that they literally just create on the spot for that real wealth, like your labor. You know what I'm saying? And they do it to the point that, like, over time, it's that they keep trading you all this paper for real wealth, and they're basically just switching positions, putting the real wealth in their pockets, giving you paper that they're printing so much of that eventually it's just going to be worthless. And there's people who literally are like saving for retirement in this type of currency that they're just printing to oblivion, inflating to oblivion, and it's eventually going to be worthless. But in the whole big switcheroo, maybe it takes a little while, but they're going to end up owning real wealth, and they traded everybody out there in the market worthless paper at the end of the day. And then they could do it again, and then they could say, okay, well, that's the end of that fiat currency, and they say, okay, well, let's just make another one, do the exact same thing over again, and just continuously rob people of their real wealth and trade them what will eventually be worthless paper for it. And it's a big scam. It's just like a big switcheroo. It's a big scam. But anyway, fiat definitely does not have a finite supply. Fiat is usually, as most people have said, every fiat currency will eventually end up at zero because they inflate it to oblivion. And what really happens is that when they inflate it to oblivion, people, it's a toxic asset. It's a devaluing asset, and people don't want to be holding on to that. It's a depreciating asset, and so they'll get rid of it. They'll just dump it, and when everybody dumps it, nobody wants anything to do with it. Yeah, it's gonna go to zero. There's no demand for it after that, and that's actually an important thing to understand right there, is how people can literally just dump an asset and it becomes worthless. Because really, intrinsically, fiat currencies are just paper or a ledger on computers. And honestly, so is every single cryptocurrency. And just the same way that fiat temporarily has value because it has a network of people that accept it, is the exact same thing for any given cryptocurrency, including Bitcoin. And I'm not saying that Bitcoin, I'm not saying that there's any definite lifespan of Bitcoin or any other cryptocurrency. I'm not saying that they're necessarily similar. What I'm saying is that they have value, not intrinsically. There is no intrinsic value with a piece of paper or a computer ledger thing. The only thing that might give it intrinsic value is its usefulness to facilitate trade. And really, that in large part is determined by what they call the network effect. If there's enough people that accept it in trade, it becomes more valuable for trade because you can trade your product, your goods or services for it, and there's already a lot of other people that will accept it for whatever they produce, and it'll just facilitate trade easier with a bigger network. And so that network effect really, if anything, gives any cryptocurrency its value. But the thing is, it gives any currency its value, to be honest, not just cryptocurrency, but any type of fiat currency as well. The thing is that the demand for any of these can come and go. It can grow, it can shrink, and that can be determined by a lot of different factors. For instance, like I said, with a fiat currency, it's usually printed and inflated to oblivion until it's just such a toxic asset that people just literally dump it because they want nothing to do with it, because they're holding on to what they know in no time will be worthless paper. And it's kind of like a snowball effect, kind of like when it gains momentum and people are clearly dropping it, like everybody starts to drop it. It's the same thing with a lot of stock trading, with these currencies, with what a lot of people call pump and dump in investing. Things will get pumped, like a lot of people, and I call it the investor cycle, but it's basically people want to buy something when it's appreciating, and they'll buy it and they'll hold on to it, which shrinks the supply, which so there'll be a price spike, a shrinking demand at the same time, attracts more people, which further shrinks the demand, further causes a price spike, and it's this kind of run up that occurs until it starts to slow down, because there's only so much demand that is going to come in, and some people might start to look at it and say, okay, this is getting kind of dangerous, it's kind of peaking so high, I don't want to buy right now, this could be the top, so on and so forth. So it'll slow down. When the demand slows down, people say, okay, I guess it's time to sell, so people start selling. When it starts selling, it's like at the top of the roller coaster, you got that run up, ding, 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 and it's like starts to slow down. And everybody's like, okay, I guess it's time to sell because it's looks like it's a top right here. Sure enough, everybody sells, and that's when prices plummet. It's basically a reversal of the trend. People dump the supply. The demand, nobody wants to hold on to because it's depreciating at that point. Nobody wants to be holding on to a depreciating asset, and it's just you get these spikes, you get these pumps and dumps, and it just happens over and over again. I mean, you see it through like even with like well-established companies, things can get pumped and dumped. It doesn't really even have to have anything to do with the company. It could just be, I forget what company it was, but they had an A and B stock for their company, and one of them just one day just went crazy. I think it was like $5 and it was like $125 by like noon. It was like $5 in the morning, went to like $125 by noon, and then I thought it was like a glitch or something. I was like, what is this? And sure enough, like I guess like halfway through the day, it started going down. It kind of went down like to like 50 and eventually went pretty much all the way back down. And the company actually released a statement. They're like, we don't know why I did that. Like we didn't do anything. We didn't have they didn't have any specific announcement for the company. Like there wasn't any breaking news that might have triggered that. It was just like, is what I call the investor cycle, just that hype, a pump and dump. People saw it going up. They said, let me get in. And they freaking just caused it to spike up like crazy. It went from like $5 to like $125. That's a lot, and yeah, the company released a statement saying they had no idea why that happened. But that right there just shows you like it can be independent of any news about a company or anything. It just because it was appreciating, people got in. They're like, look at this skyrocketing, let me get in. And you have to understand investor demand. You have to understand investors. When you're working with an investment vehicle, people buy to sell again at a higher price. It's just what it is. And people don't want to buy something that's going down. You're not able to buy, you're not able to do that when something's depreciating. So when people see things appreciating, they're like, oh, let me get in. And then they cause a further appreciation by, adding pressure. And there's a very specific function with that. I've talked about it before. There's like market orders and limit orders. When people order with a market order, it actually goes up to like the lowest limit sell order. Like, and a lot of people put these limit sell orders in there where they want to sell because that's what they call taking profit. So if somebody does like a market order, it'll usually cause the price to go up to the next lowest limit sell order. And so when people are rushing in, a lot of times they'll do these market orders, or they'll actually set limit orders out in front to like catch it. So if things are like rushing up, like it'll just cause like this crazy spike. And that's what you see a lot. You see a lot. And it can be totally, detached from any news about a company. It's just what I call the investor cycle. It's like the hype. Like people want to get in on something that's appreciating quickly. And it's like a lot of people say, it's like a casino almost. And this can be with well-established companies. You know what I mean? That's relevant because this same pattern can be seen in cryptocurrencies. And that's pretty much exactly what happened with Doge. Doge was a joke. And then Elon put that meme out, and it didn't happen right away. But I think it maybe, planted some seeds a little bit. And there are like a couple run-ups like before, and I kept track of it because I already understand or really already understood, this dynamic of just like this pump and dump, like, irrelevant to anything a company is doing. And I know that a meme coin that was made as a joke can still do the exact same thing. And so I was paying attention, and I saw a lot of these spikes. And I'm just being honest, because I understand that dynamic right there. I did catch it at one point. I should have bought some and held on. Really, I probably could have made a decent amount of money. But I caught a few little run-ups and sold. But those was made as a joke. And it eventually, I think I don't know what it started at. And I don't know what it is now. I don't know like the total like appreciation that has occurred. Like, but I think like since the beginning of the year to now, I think it's like almost like 100x. You know what I'm saying? It's like, if you look at like a traditional hedge fund, uh, I think like if they make like 20%, which is like that'd be 1.2x. That's like they're like, oh, great returns, this year. You know what I mean? Something just 100x'd. You know what I mean? Like that's insane compared to like even like some of the best performing hedge funds. Um, it's just and that's what it is. And a lot of people last night when they're talking with Mark Cuban talking, they're like saying, oh well, Dogecoin don't have the fundamentals, so why are you telling people to get into this and that? It's like, dude, it's a casino. It's you get in, you ride the pump, you sell, bro. It's like how should I say it? It's like, I mean, it's just the nature of the entire stock market. It can happen with a well-established company and everything. It just is what it is. Every investor is trying to make money. So, and some people are going to hold for the long term. They're value investors, whatever. And I'm not even going like saying anything against it. Value investing is basically taking advantage of the pump and dump. What, like, as Warren Buffett, says, his mentor Benjamin Graham, who wrote in the book The Intelligent Investor, he says Mr. Market is irrational. So it says basically take advantage of the irrationality. So if the market dumps super low, and you understand that the company is actually valued more than what the market says at that point, then you should buy it. And that's value investing right there. And so it's basically telling you to take advantage of the irrationality or the pumps and dumps in the market. And so I'm not like against that. I'm just saying, that's some people's strategy. But another strategy is buy it at this point, ride it up, sell it, and you could even do you could short sell it on the way down. You know what I'm saying? There's options with various companies, like there's stock options, and you can work with those, calls and puts, whatever. There's a lot of different strategies. People employ different strategies. I'm just gonna be honest. Personally, I understand this pump and dump nature. There might be certain things that I would like, just buy and hold because I can see them growing in the economy, like as a company, and then I could just anticipate an increase in their in the company's market cap or total worth, value, whatever you want to call it. So yeah, certain companies I'd buy, just hold on to in anticipation of growth. And you can almost, a lot of people say that the market adjusts. How do they say it? They say that the market, if let's say, okay, so you got your price to earnings ratio. Some of these price to earnings ratio can be like 1-to-1, like the price, you know what I'm saying? Like, but then some of them are crazy. It's like 15-to-1, you know what I mean? And whenever it's crazy like that, a lot of these, I don't know what you want to call them, like investing commentators, they say that, oh, the market is like betting on this company, to grow. So they're saying that price to earnings ratio is like justified by people's anticipation of that growth. And in reality, half the time, no, it's just a crazy pump. It could be like certain companies are just like trendy, certain companies are just like almost like a meme in society. And if they have a lot of controversy, or at least just a lot of talk about them, that can generate a lot of volatility, movement either way. And really, just the more talk there is about a company, it could be rumors, it could be positive, it can be negative. It can make it go up irrationally or down, and that's just how the market is. I mean, that's what Benjamin Graham said a long time ago. Warren Buffett's mentor. That's what the whole premise of the book, The Intelligent Investor, was. I mean, that's the whole premise of value investing, is that the market's irrational, has these crazy swings, pumps and dumps, and you just have to learn to take advantage of them. His strategy was, wait till it's irrationally low, buy it at that, hold it, and wait for it to go up. If it's a company that's higher value than what the irrational market currently says it is. And you can anticipate long-term growth with that company if it's a solid company like that. um but yeah, just it's basically taking advantage of that irrationality. And what I just suggested with riding it up, flipping it on the way down, profiting on the way down, that's just another strategy to take advantage of that irrationality. I think I just understand it in a little bit of a more nuanced way. But the point with all of this is that Dogecoin is a perfect example of that. It is not, but so is Bitcoin. And that's where the value comes from in large part, because right now, neither has really been used as a medium of exchange. They have not been used as currencies as they, were I guess supposed to do. And really they have mostly been investment vehicles. And just like any other investment vehicle, like I said, almost all of the demand is investor demand, and investor demand wants to make gains. They want to profit. So what they are doing is causing these irrational spikes, ups and downs, and that's what you're seeing with Bitcoin. It has, and the thing is with Bitcoin and Dogecoin and all these other cryptocurrencies, you see it all day. It's just these irrational spikes. It's what I call the investor cycle. It's what a lot of people generally call pump and dump. I think most people know that. A lot of people know that. There's no intrinsic value. The most value that any of these have, I would say, one is to facilitate trade as a medium of exchange, as a currency. Two, some people will say a store of value, but if you really understand the dynamics of an investment vehicle that has no natural demand, like no consumer demand, and is only being used as an investment vehicle, you might understand that those things are very fickle. There's not an intrinsic demand for Bitcoin or Doge, like a natural demand. There's no consumer for those. At most, and I know this a lot of people are gonna be like, what, like, because there's so many people that are just so hyped up on these things. But I like I just said, it's best utilization, I would say, would be to facilitate trade as a currency. That would make it have relevance in the market, an actual function in the market. A lot of people are saying that it's a store of value, but when you're seeing it go up and down, how is that a store of value? And if you really understand the dynamics, like I just tried to explain, you would understand that investor demand, when it's a pure investment vehicle, and almost all of the demand is investor demand, you understand it's subjected to mood swings. You know what I mean? It's irrational. As Benjamin Graham says, it says Mr. Market is irrational, and it's like that. So how is that a good store of value? You know what I mean? It's really, the markets move with like a herd-like mentality. Like, people really anticipate what other people are going to do and act accordingly, and then they manifest basically what they think other people are gonna do. Like, for instance, if there's some like rumor that comes out that says it could say the price of Bitcoin is going up or the price of Bitcoin is going down, whichever way, if people anticipate that other people believe that and are going to buy or sell accordingly, then they themselves will buy or sell accordingly, because they want to get in before it either goes up or down. And so they end up manifesting a price change up or down themselves by anticipating what other people are going to do and what they're going to do to the price. And it's kind of just funny like that. It's kind of like this like herd mentality type thing. It's kind of what I call a de facto agreement as well. It's like these the outcome is not really intentional. It's more or less like just almost like it's kind of stupid how it actually the price has changed like that, because really people are anticipating what other people are doing. They're anticipating what the price is going to do, so they're looking at what they think other people are going to do, and even if but that's what everybody's doing, and because everybody's doing that, anticipating what everybody else is doing, is like it all just, it comes out to it's irrational. It really is. And And I understand that. I mean, that's really what you got to understand. I would say in investing more than anything is understand if it's a pure investment vehicle, then pretty much all of the demand is investor demand, and investors have certain incentives. They want to make money. So if it's going up, they're gonna try to get in early, and it's gonna cause these run-ups. If it slows down, they're gonna sell because they think that's the top. Everybody starts selling. Nobody wants to buy it. The investor demand disappears. It evaporates. Nobody wants to buy a depreciating asset. Um, and that's why you get these crazy price swings. And that's why it's not good as a store of value, like right now, because it doesn't have really a market function. It's not being used as a currency. If it was, if any of these were being used as currencies, really like on a big scale, and things were being traded, or these, let's say, cryptocurrencies were being traded for goods and services, they would have a relative value to goods and services, even if on an exchange they had a relative value to, like, let's say, fiat currency or to each other. um if people in the economy are willing to exchange those cryptocurrencies for goods and services, then and there was a network of people that were willing to do that, then that would have a greater economic relevance, a bigger functionality in the economy, and it would, I guess, justify any value of that cryptocurrency or any currency, even the fiat currency. I mean, that's what I was saying earlier. It's like a network effect. And I know a lot of people are going to say, yeah, there already exists a network effect for like Bitcoin, but really is not being used. Actually, it's starting to be honest. It's actually catching on. Like El Salvador just started accepting it as legal tender. And they have this Lightning network, which can handle more trade. So it's catching on. And that might validate Bitcoin as as an actual currency. And then with that, because it has this actual functionality in the economy, it might have a justified value in that sense. But then there's still speculation that's occurring on these exchanges, where people are trading between, Bitcoin and other types of currencies. And then there's the matter of there being the entire supply versus the available supply. Like, a lot of people right now are just holding on to Bitcoin, so there's only like so much of a supply available. And if let's say people start to try to use that to facilitate trade in the economy, people will there'll be like a relative value that emerges between goods and services, any given good or service, versus Bitcoin, because there's only so much of a supply available even in any given region, versus how much trade is being used to facilitate. And there will be a relative value that emerges between Bitcoin or any given cryptocurrency or fiat currency, whatever, to goods and services. And it could be in a specific region too. It could just be, there could be money scarcity, or it could be, scarcity of any given good or service. And relative values emerge because I've said this 100 times, but the entire economy is trading, and each individual trade is kind of what will determine overall what the relative value of any given currency is to any given good or service. And then through that you can also kind of judge the relative value of any given good to another good. Like, if you're going to trade this good for 100 Bitcoin and trade that one for 50 Bitcoin, then you can kind of generally judge that maybe this one's half, worth half as much as that one. So I mean, that's kind of using money as a translation factor, or I don't know, like a measuring stick of sorts. I don't want to get this too confused. My whole point is that there's an active supply versus the entire supply, and the active supply is just what's available for trade, because a lot of people are just holding on to it, and that kind of creates like an artificial shortage. And like I said, depending on how many people, how much demand there is, which will in this sense be a natural demand if people want to use it for to facilitate trade, versus a limited and artificially kind of limited supply. You might get kind of value spikes with that. And then a lot of the people who are holding on to it, you know, they're sitting there holding on to an appreciating asset because of that. And that's really market adoption. And that's a totally different ballgame. And I said this like back in like 2017. I actually made a video where I was kind of talking about like that being like the end game of cryptocurrency. Like when it gets market adoption, like any cryptocurrency, Bitcoin or any other cryptocurrency, there was like Litecoin and other ones going around back then. Then that's a different type of valuation. It's not just on an exchange, you know, like how much investors are willing to trade for Bitcoin. It's really the functionality in the economy where the relative value of any given currency emerges, you know, to goods and services, you know, through the supply and demand function of, you know, people trading their goods for, you know, any type of currency to facilitate trade. And that's a totally different ballgame. That's a totally different type of valuation right there. And like I said, it can be used as a translation factor, as a measuring stick. And even if it's on the exchange trading for like, you know, a certain price relative to other currencies, you know, people, I guess there's what they call arbitrage. People might be able to, you know, exchange into cryptocurrency and maybe find a better deal using cryptocurrency to buy a good or service than they would be, you know, just using the original currency that they had in their hand, you know. I guess, I mean, that's generally what's referred to as arbitrage. And but that's a totally different ballgame. It's not the same as you know, just investors being on an exchange and trading you know, either fiat for any given cryptocurrency or different cryptocurrencies for each other. It's a totally different ballgame. Investor demand is totally different than natural demand. It's a just entirely different thing. And really, like I said, if and when mass adoption occurs, like for actual like facilitation of trade, that right there, I think, like I said, with artificial scarcity, you know, versus the entire supply, that might cause like just a different level of appreciation there. But okay, so a lot of people probably hyped about that. A lot of people hold on to Bitcoin like, yeah, let's wait for that to happen. But that does not mean it's going to stay like that. There can be competing currencies that compete in those markets, you know, for like market share of what people use to facilitate trade. Which, you know, obviously with like the price emergence I was talking about, like with, you know, any given currency relative to goods and services, you know, if a new contender comes into the market and, you know, takes up like half the market and like half the people are deciding to use that, the network effect shrinks for I don't know, Bitcoin, any given cryptocurrency, and, you know, the other one takes up, you know, a big chunk of the market, and maybe eventually it can take over the whole market, and, you know, Bitcoin or whatever cryptocurrency can be you know, just pushed out, and it can become obsolete. And just like a fiat that is you know, printed to oblivion, inflated to oblivion, and it obviously at some point becomes a depreciating asset because a lot of people are dumping it. Same thing, if the market share of Bitcoin's going down, it'll probably cause like a cascade effect. It could be Bitcoin or any cryptocurrency or any currency, but it'll probably cause like a cascade effect where like people, it starts to depreciate. People say, okay, I want to get rid of it, and it causes to like rapidly accelerate in its depreciation until people just like totally dump it. Everybody wants to get rid of it because it's depreciating so quickly, and that's like the true nature of a lot of these things with these currencies, and even with certain stocks and stuff. I mean, the correlation that I really kind of figured out, probably, I think it was like 2017, and it really connected because cryptocurrency is called a currency, but it's being traded like stocks, kind of, where I saw a lot of, you know, just with the fluctuations, the pumps and dumps, whatever. I was like, and it kind of connected the worlds of money, you know, currencies as we traditionally know them, with like fiat and everything, versus like these irrational cycles in the markets like that. And I could kind of see, I kind of connected all that. And I could kind of see like the life cycle of any given type of money, and that's kind of what I'm describing here a little bit. And it's really a matter of, it's still the same thing. It's like people don't want to be holding on to a depreciating asset. So if it starts depreciating, if it's inflated to oblivion, it's losing value, it's a depreciating asset, people probably will look at that and say, I don't want to be holding on to a depreciating asset. But if there's a money monopoly, that's all they have, they're like, okay, well, I have no choice. But if contenders come in and there's, one that's appreciating versus one that's depreciating, and that can happen because of, one coming in and taking over market share, then it might just be like this dominating effect where, people all jump into the appreciating boat, and this one just goes totally down in value, and it can go to nothing, and this one just goes way up. And then on the other hand, it could come back and people buy like at the bottom, and then this one's coming back up, and it's like this game of, people trying to get into what's appreciating, sell to make a profit, and then it could go back, and they're trying to get in this one early so it could catch it as it appreciates and try to sell it to make a profit. And that's actually what I've called the money game. It's just an understanding of these fluctuating values, that are kind of, I guess, brought about through market share. There's also what I call like user-based migration. I've mentioned that. It's a fluctuation that occurs, like, and that's the thing. I don't know, like some of these things, like Bitcoin. So many people have been talking about it. It's a cultural thing at this point. Just like gold. A lot of people say that gold, and I guess this is the fourth wheel on this one, gold. A lot of people say that gold has, my bad, the video ran out of space, and I figured I'd take a break and readjust my vehicle to get some better shape. But anyway, as I was saying, a lot of people think that gold has intrinsic value. It has a couple of industrial uses, but more so I would say that it is a culturally valued asset. And that's what gives it its value, because anything that's culturally valued, it kind of will create demand for it. It could just be like there's a lot of things that people buy that aren't really useful. It's just they have cultural value, like, I don't know, Pokemon cards, I don't know, stuff like that, you know what I'm saying? But they have value because there are people that want them, that create demand for them. And then there's what I call a de facto agreement, which is basically, people will buy something because they think other people want something. So, and that's kind of what, like, that really thinking about money is what kind of, helped me. I don't know if I'm the first to come up with that concept, but that's really what got me to be able to, see this type of thing in a lot of different places. But it's basically because people think other people want something, they'll, value it or trade something for it, because they think if they get their hands on it, they can go to somebody else and trade, them for something else for it. Because so if everybody's thinking everybody else wants something, then everybody pretty much will value it because they think everybody else values it. But really, at the end of the day, maybe everybody else just values it because they think everybody else values it. And that's what I call a de facto agreement. And it's kind of weird because, there might be things that really nobody really likes, but they think everybody else likes it. So it's like everybody there'll be a demand for it, but nobody really might like it at all, Maybe nobody ever actually liked Pokemon cards, but everybody thought everybody else did. So they all went and tried to get their hands on them, and so they could trade them with each other, and it's kind of crazy how that happens. That's what I call de facto agreement. But I think gold is a culturally valued thing. I think it goes all the way back to like ancient Egypt, with pharaohs adorning themselves with gold jewelry, just, I don't know, just be honest, people blinging themselves out, whatever. But especially like pharaohs, people of like a higher social class, it's more like it's like a social status thing, and that makes it relevant in culture. And because of that, I think that's really where it gets most of its value. Eventually it started catching on as money, and again, that'll go back to the relative value that emerges to goods and services when something's being used as a medium of exchange, to facilitate trade. So it probably had a value because of that, but then that kind of went away. But yeah, I don't think it like some people try to say it's the industrial use that gives it the value it has. Like, that's just not true. What gives anything in the economy value is demand. What, like, it could be anything. It doesn't have to even be useful at all. It can be like, there's art, for instance. That's just, it's just a picture. You know, there's people that buy like abstract art, just like a red painted canvas. Like what use does that have at all? Are you telling me that, oh, it has an industrial use? No, it doesn't. Somebody was willing to trade whatever they were willing to trade for it, and that's what gave it value. It's what people are willing to trade for something, and that is really what demand is. What people are willing to trade for it. It's not nothing. People just need to understand that it doesn't matter. Like, a lot of people try to say that the value of something is determined by the amount of work that was put in to produce it. That's stupid. You could waste your whole life trying to build something that nobody wants. You know, they're just like, oh, that's a piece of crap, and then, you know what I'm saying? Like, it doesn't matter how much work you put into something. If nobody wants it, nobody wants it. It has no trade value. If there's no demand for it, there's no demand for it. It has no market value. So, I mean, that's really what it comes down to. It could be something that you mass produce, like you'd spend 1 millisecond producing it, but it could have a higher value than something somebody spent their whole life trying to produce. It's just market value. It's what people want to trade for it. That's really, in essence, what demand is. And that's really, in essence, what the value of something is. So anyway, a lot of people trying to say that gold has an intrinsic value because of its industrial uses. That's not where it gets its value, dude. It gets its value because it's basically, I just think it's funny, so I'm gonna say it. It's basically like a meme coin in our society. It's like, it's a cultural thing. People feel like it has value because they just have for so long. It's like, traditionally has had value, and so people value it. It's just, people associate it with being valuable. It just is what it is. And now that same thing is kind of happening with Bitcoin. Dogecoin is like a new thing. Dogecoin, like, they straight up call it a meme coin. But those things, it's not intrinsic value that gives those things value. It's like, again, like a de facto agreement type thing. It's what people are willing to trade for. It doesn't matter how much work anybody put in. It doesn't matter if it has an industrial use. It matters if somebody's willing to trade for it. It matters what the actual demand for that product is. And as I was saying earlier, with any given investment vehicle, if it's like a pure investment vehicle and like pretty much all of the demand is investor demand, that demand can fluctuate just based on whether it's appreciating or depreciating, and then it causes these crazy spikes. The pump and dump investor cycle, Mr. Market being irrational, whatever you want to call it. And so that right there, like, a lot of people say, oh, well, it has intrinsic value, and then they don't understand why it's like going up and down. It's because that it's not the intrinsic value that's determining the demand for it. What's determining the demand for it is investors anticipating what it's going to do. I just explained that earlier. People want to buy appreciating assets. They want to dump depreciating assets. Demand will appear when it's appreciating. Demand will disappear when it's depreciating, until a point where they think it's going to go back up and or it's going to bounce or whatever, and then demand will reappear. You know what I'm saying? It's that simple. It's that simple. It fluctuates just as simply as that. It's not an intrinsic value. That's not how this shit works, dude. So many, and it's crazy because there's so many of these like prominent economists or whatever that like talk like they know everything. It's like, dude, y'all are so not on point. Like, there's like famous people like that will like say the stupidest things sometimes that are like supposed experts in the field. I'm like, dude. And that's really what got me. That's really actually what inspired me to start making a lot of videos. Because really, it was in 2017 that I started learning about a lot of it. Because really, Bitcoin was booming. I already knew about Bitcoin earlier, but I didn't really understand investing. I was a dumbass. I understood the whole monetary system, but I didn't understand investing. I was stupid. But I got into investing probably like early 2017. And there was like kind of a crypto boom right then. And there's all these people on the internet, even people on like, CNBC. Warren Buffett was talking about it. He was saying it's a bubble, and I'm like, but some people are saying it's going to the moon. So I'm like, how do I know? I don't even know what all this, like, who is telling me the truth? How do I like know really what it's gonna do? Is this really a safe investment for myself? So I really had to think it through for myself, and I just had to really think until I understood the market dynamics, and I said, okay, well, what's causing it to move? And I just started thinking, putting myself in the position of the buyer and seller. And that's what it is. Every single transaction, there's a buyer and a seller, and they each have their own reasons for either buying or selling. And you just have to think of either side, which will kind of tell you what is causing the movement. the price movement. And I mean, there's that, but then there's also like specific types of trading. There's like margin calls and stuff. But if you understand the general mechanics of all those, the actual finances with the investor psychology layered on top, you can get a pretty good sense of what's causing prices to move. Like, that's pretty much what it comes down to. I mean, it's not that hard. But anyway, yeah. So I came to understand a lot of this stuff, and yeah, I realized that a lot of these so-called experts really don't know what they're talking about very much. They maybe have, I think a lot of them maybe got lucky in certain positions and got rich. I'm gonna be honest. I'm not even trying to. Well, I can't hate because like rich people are like rich. Like they did it one way or another. So it's like, okay, I'm not even in a position to like hate on whatever, however they got there. I don't know. Some of it might be luck. Some of it might be, I don't know, less than honest. I'll mention it. But Mark Cuban, he actually said it himself. He has a blog post where he actually explained it. And this is how I knew Mark Cuban actually knows what he's talking about, because the blog post explained a lot. He said that he basically got lucky and started a company during the dot-com boom, and it got publicly listed, and because it was the market's irrational, it got fucking boosted to high heaven. You know what I'm saying? That's how he got paid so hard. And that's how he became a billionaire. And he basically said it, and he said he understood at that point that the market was irrational. It's not based on like fundamentals. He said the dot-com boom basically showed him, and he says he basically got lucky. He was in an advantageous position to profit from that. And and really the whole blog post, it's on his little like website. I don't even know what it's called. But I remember I read that blog post, and I was like, he gets it. You know what I mean? He understands like these fluctuating prices are independent of any intrinsic value or anything like that. He understood that, and he seems to have profited handsomely from it. And then he went into, all of his other investing ventures. Now he's an angel investor, right? He's on Shark Tank doing all this stuff. I don't know. I don't agree with everything. I don't know. Mark Cuban, he seems alright. He don't seem like a bad guy. I just don't agree with everything he says. I don't even want to get into it. There's other things that are like beyond any of this that I don't agree with him about. But yeah, he seems to understand that at least. And I think that's what a lot of people need to understand about these markets, because there will probably be a point. And really, here's what I've talked about. I've talked about, an emerging market of money with different monetary products that people can choose from, to use to facilitate transactions. And for you to make a competent decision about what to use, you have to understand the dynamics of not only each individual currency, but, how they compete with each other in the market. And like I was talking about earlier, some could, it can be like a fluctuating market share, which can affect the value. People want to, get on board with something that's appreciating. People want to jump, ship from whatever is depreciating, and it can cause like an imbalance, all types of stuff like that. I've actually been thinking to myself like what type of solution to all that there can be, like, because really, the idea of Bitcoin was like we want a more stable type of money, and that right now it's being affected by what I call the investor cycle. And then there's all these other ones coming in. There could be the market share fluctuation like I'm talking about. So I've been trying to think like what type of like system can be made to maybe create some stability, because inevitably, there's going to be some people that are good at playing that game, what I call the money game, as all these fluctuations are occurring. And there's going to be some people that just want to like live an old traditional life, that just want to work, doing making an honest living, some type of, whatever they do, run a business, some manual labor, whatever, have a farm or something, and they just want to make money, save for retirement, the old-fashioned way. And if there's all this fluctuation occurring, it's like, dang, like they're really going to have a hard time. There's going to be people that know how to take advantage of this, and there's going to be people that are sitting there like sitting ducks, being taken advantage of. And really, they might be holding on to a type of money that, just like the dollar right now, the dollar, some people they've been saving their whole lives, trading their freaking labor, their life for paper that is rapidly becoming worthless. It's like, dude, they're getting so ripped off. Like, that's just so, to me, that's just so, that's bad. That's very, it's bad. Like, that's just wrong. I just have to, I think anybody can see that. So I've been trying to think, of a solution with considering all of these market dynamics, like what can be done to create something stable to where people can just like do a traditional, like live a traditional life, just working, saving for retirement, and by the time, really hopefully, and a lot of people say like Bitcoin's a good one, and it might be for a while, and until maybe there's a new player that comes on board and takes over some of the market share, and maybe that won't happen. Maybe Bitcoin will be so dominant for so long that it's just like this one major monopolistic type thing. But the thing with that, the things to consider about that are, if it does become like this one major dominator, like one, it's all digital, which means it's dependent on computers, electricity, and if that goes down anywhere, at least the people where it's down at won't be able to use it. So I kind of suggest there always being some type of physical money just to facilitate trade. Gold, even like gold or silver, they still work. Like you still facilitate trade, and that's the thing. And that's the thing about money that I always try to preach, is that it's still just like bartering. It's just trading. With bartering, you trade item for item. Money's an item. You trade. It's just to get an item that you actually want. You go to the medium of exchange item. You it's still bartering for this. Bartering for money, and then you borrow the money for something else. I just say it that way, but it's really you're trading for money and then trading money for something else. Just so you can see, just so you can like put the idea in your mind that money is like a type of good that is used as a medium of exchange to facilitate trade. And where was I going with this? I just want to get that in people's minds for sure. That helps so much when people can see that, because if you're thinking of money as some arbitrary thing, that's when it starts to have like this like illusionary effect where you like start to think it's just like some mystical thing and you don't understand the dynamics of it. It's like, no, you have to understand the dynamics of it. Oh, I was talking about physical money. Gold and silver work fine. It's just you trade for gold or silver. It's like right now it's an asset. It's still being used. It's still valued as an investment vehicle. You could use it for trade. Same thing. It's fungible to a degree, meaning you can break it down to, I don't know, kind of small increments, and you can measure it out and stuff, and you can carry it around. You can do trade with it. So yeah, I suggest there always be some type of physical money. So that's one thing to consider about Bitcoin. That's all digital, dependent on electrical internet grid. Two is if it's dominant, like, and I was saying, there's all these relative values that emerge to goods and services in different markets around the world. Like, how will all of those markets coexist? What type of arbitrage will there be? Like I was saying earlier, there's the total supply versus the available supply. Like, what effects can, people all deciding to either hold on to Bitcoin all at once or sell all at once, what effect can that have on the available supply, which will, can have an effect on the value, relative to goods and services of Bitcoin. Or I guess we're talking about Bitcoin here becoming a market dominator. I think those are two major things to consider. Also, still, like, what type, and it really is like, I guess the question, what type of arbitrage might exist kind of covers that. But if it's still being traded on exchanges and if it's just a dominator though, then everything else will be traded for it. I feel like, I don't know, it's almost like, how like most things are denominated in like dollars today. If Bitcoin becomes the dominator, then everything will be like denominated and like the value of everything will be measured. It'll be like the measuring stick, that'll be the unit of economic value measurement, in probably around the world. If it becomes a global dominator, it'd be like, how many Satoshis is this worth or whatnot. But still, there might be like with the exchanges, there could be with investing, speculation, it could be shifting values that affect like I said, like what type of arbitrage there will be, And those are all things to consider. Really, the first one is just like the fact that it's digital, dependent on electricity, dependent on computer networks. And if it goes down even for like a locality, then that locality won't have it to facilitate trade. So just as a safeguard, I suggest physical money. I generally suggest there being a whole bunch of competing currencies. It's just for redundancy, you know. And I've talked about that. I just made a video about that like 2 days ago. So go watch that. Go watch all my videos. Go watch a whole bunch of my videos. Get educated, whatever. I throw ideas out there all the time. I'm trying to just help people wrap their heads around this type of stuff. But so yeah, one is dependent on electricity, computer networks. Two, the I don't know. I guess you could say the shifting supplies might affect the value, and it can create all types of arbitrage. So that's something to consider. Those are two things to consider. What else? So what was the original premise of this video so far? Removed from that. I don't think we're that far from it. We're pretty much on the same page. What I was trying to explain was like the similarities and differences between like Doge and Bitcoin. And really what I was trying to get at, like the point that I was really planning on making, was what I was talking about, how it's not intrinsic value. It's not like it has a better network. It's just literally like a cultural demand that affects its value. And even if Dogecoin doesn't have a finite supply, if it has a infinitely growing supply, whatever, so does fiat. But fiat's still been used for quite a while now, so it's not like it can't be used. Yeah, Bitcoin might be superior in the sense that it has better parameters. You know what I mean? It is probably a superior monetary product. It doesn't mean people aren't going to use Dogecoin. It doesn't mean that people aren't stupid and don't know any better and will use Dogecoin over Bitcoin, even though Bitcoin's a better product. People are stupid sometimes. It is what it is. A lot of things become valuable in our economy because of stupidity. It is what it, like I said, like a de facto agreement sometimes. You can't you could try to talk sense into people and tell them like, oh yeah, Bitcoin's better, like Doge is just a stupid meme coin. You could try, and it might affect people's perspective on it, and it might affect how people value it, what the demand is for it. But it might not, because people these days are crazy, man. They're gamblers, dude. They want to get in there. They'll buy whatever. They'll buy whatever meme coin they think is gonna blow up. They're trying to get these 100x gains in half a year. You know what I mean? Like, I don't blame them. It's a casino, dude. People are gamblers. It's a gambling world. My homie said that a while back. Or somebody. Okay, never mind. Shut up. Yeah, man. People. They're not always rational. Benjamin Graham said that way back. The whole market's irrational. The whole thing's like a herd mentality type thing. There's, like I said, like de facto agreement. You have to understand those dynamics to understand what's really making prices move. It's not intrinsic value. Like, that's just such a fallacy. It's just so, like, come on, when are people gonna figure that out? That's really what I'm trying to convey here. I think that was like the main point I was trying to get across by comparing and contrasting Doge to Bitcoin. It's like they both have more or less a cultural value. They're both like meme coins for the most part. They are. And I know some people are gonna be like, no, but Bitcoin's network, da-da-da. They're both basically meme coins. They have value because they have cultural relevance, because people know what they are and they think other people value it. So they're like, I'm gonna get my hands on it so I can sell to somebody. And really, right now, they're investment vehicles. So people are looking for it to appreciate and sell and trade to somebody else. Yeah, so these it's more or less like a de facto agreement right now. It's a cultural thing. De facto agreement. It's not intrinsic value. It's not like nobody's consuming Bitcoin. You're not eating it. You're not living in it. You're not driving it around. You know what I mean? If the most industrial use it could have, or I guess actual market relevance, would be to facilitate trade. And some people say it's a store of value, but like I said, with the fluctuating demand, like I said, demand appears when something's appreciating, it disappears when it's depreciating. With that, it's only so much of a store of value right now, and really, it's just more or less a meme coin. It's like it's a casino, it's a gamble, And I'm not trying to denounce it because really it is catching on as with the facilitation of trade type thing. Like I said, you had El Salvador, Lightning Network, so. And believe me, I much prefer Bitcoin over any fiat currency. But yeah, for sure. I'm not denouncing Bitcoin if that's what anybody's thinking. A lot of people just like so like defensive to Bitcoin. They're like, oh my gosh, like how dare you? It's like I'm just pointing out the facts. Like it is what it is. Right now it has cultural relevance, and people have done a good job of increasing its cultural relevance. They got the laser eyes on freaking Twitter. Freaking memes everywhere, like people are memeing it into cultural relevance. That's what people are doing. And that's, I guess, organic marketing, you might say. Everybody knows what Bitcoin is now. Everybody. Like there was a time where they didn't, now they do, and pretty much everybody knows what Dogecoin is too. You probably thank Elon in large part for that. Elon is a living meme, bro. Like anything, like he could tweet one thing and like everybody, there's headlines around the world talking about it. Elon's just in that position where he can do that. You know what I mean? These are meme coins though, dude. They really are. The gold is a meme coin. I know a lot of people say it has industrial value, blah blah. But okay, what I mean when I say that, I mean that its primary value comes from it being culturally relevant, and that's really what drives the demand for it. And like I said, it's like the network effect, basically. That right there is what kind of more or less gets some value, and that's again what I was talking about earlier, like a de facto agreement. It's a meme. These are meme coins. These things have value because they're culturally relevant, because they are memes in our society or culture, whichever one you want to call it. I guess that's it, man. It's like a whole rundown, dude, of like the whole thing, ain't it? Like, what else do I need to explain? I don't know. I just like when I was listening to that little like Twitter debate or Twitter Spaces debate last night, I'm like, oh my gosh, like they're saying so much stuff. Like I said, like it would have been better if I was in there and I could have been like, okay, here, let me point this out for you, like clarify this. And there's so many things, like I was just like, I don't know, they all just like blew past me after a while. But I don't know, I figured I'd make a video this morning kind of just explaining like a general overview what I think people need to know. And this is important for, like I said, like the emerging market of like all these new currencies coming out. Like people have to understand not only the dynamics of each individual currency. It's kind of like there's different car manufacturers. You have to understand like, oh, this is a diesel, that's a, I don't know, 4-cylinder, blah, like whatever. There's different parameters, dynamics of different vehicles, or different products. It's the same thing with these different cryptocurrencies. They're different monetary products. If you understand the dynamics of them, what you're working with, you can make a better choice as to what you want to use to do business with. But also, like I said, the interaction with like competition in the market and market share, because really that network effect plays a large role in the value of these various currencies, and is relevant. So that's part of the dynamic, really. And so people need to understand that. And that's kind of, I see this market emerging of these new cryptocurrencies and different types of, I just see this emerging money market, basically. And I feel like people need to have a general understanding of these dynamics to be able to make competent decisions as to what they should use for business. You know what I mean? I feel like good monetary products should win out over bad monetary products through competition. And the way that can happen is if people actually know the difference between a good monetary product and a bad monetary product. So that's kind of why I'm explaining these dynamics ahead of time, because I think it is going to be relevant. I think it already is relevant, to be honest. And fiat is going to be notoriously like the worst monetary product of all time. It's inflated to oblivion. People are literally just being robbed through it. Yeah, it's gonna be like the worst monetary product of all time. And I think the government right now, they're scared of it. They're like, oh my gosh, like they're scared of all these cryptocurrencies coming up because it's about to rob them of their ability to rob everybody else. You know what I'm saying? Fiat is hands down the worst monetary product. It will be like notoriously like the worst monetary product of all time. And it's right now because it's a monopoly, and it's been like forced upon us. It's bullshit. It's like a Trojan horse that allows, you know, government or anybody that can really get their hands on money through loans or whatever. It's a way for people to be robbed of their labor, productivity. You know, literally money's just being created and traded for real wealth. You know what I mean? And it's been happening for a while. Like I said, they'll inflate one to oblivion and then they'll just do it again. It's ridiculous. It's just, people have been robbed for such a long time now. It's ridiculous. And so I am all for Bitcoin. I'm all for Dogecoin. I'm all for a new market of money emerging, where people are not getting robbed, where honestly, if anything, people can participate in some of that wealth transfer a little bit. And like I said, you know, some people that understand this type of stuff and they'll probably be able to take advantage of it more than others. So ultimately what I would like is for there to be some type of stable situation where people can make an honest living. Right now, there might be one of those situations where, you know, there's like the tilt and people are in before it appreciates, so on and so forth. Those people are playing the money game right now and putting themselves in positions to potentially, you know, take advantage of the shift in the market share and whatnot. And there might be a little bit of a wealth transfer there. I'm just being honest. So, just saying. Okay, I think I've explained enough. That's all I gotta say for now. I've been talking for a while. I mean, it's relevant stuff, so I figured keep going until I feel like I got it all out. So yeah, without, you know, trying to just draw it out for too long, I think that's all I gotta say for now. I've already made a lot of other videos talking about other stuff, so you can check those out. I'm gonna like post this on Twitter. Like if I see another like crazy debate, I'm just like post this link. I'm gonna be like, dude, like look at this, like, cause these people don't know who I am. Like I don't have like, I'm not a meme in society yet. You know what I'm saying? So, you know, I try to get in one of these spaces. People don't know who I am. They just think I'm like some like, I don't have that same cultural relevance that Mark Cuban or whoever does. You know what I mean? So maybe I'll get there one day, and you know, next time I press, you know, let me in, let me speak. You know, they might actually let me in. So we'll see. So yeah. So until then, I'm gonna leave it at that. And hope you learned something. I'll talk to y'all later. Have a great, wonderful, blessed day. Be a good person. Be amazing. Love one another. Let's do good stuff. Amen.